Hello, this is Japanese Economic Review Channel, and today we've got some fresh numbers to crunch. The Cabinet Office has just dropped its preliminary GDP figures, giving us our very first glimpse into how Japan's economy wrapped up 2025. So let's get right into it.
All right, so let's set the scene a little. The last quarter saw a bit of a contraction, right? So naturally, everyone was waiting to see if the economy could pull itself back up. We're going to start with the big one, the headline number that's grabbing all the attention.
And there you have it. For the October to December period, real GDP, it grew by 0.1% from the quarter before. Now look, positive is positive, and that's good news. But let's be real, 0.1% is, well, it's tiny. It feels less like a bounce back and more like the economy just managed to keep its head above water. We avoided another dip, but just barely. Okay, so how do we think about that number in the grand scheme of things? Well, economists like to annualize it. Basically, if the economy kept up this exact same tiny pace for a full year, you'd get annual growth of 0.2%. Again, it's not negative, but it's not exactly a sign of a booming economy, is it? It really paints a picture of some pretty weak momentum as we kick off the new year. So, a headline number is one thing, but we've got to look under the hood. To really get a feel for what's going on, we have to break it down and see what's actually driving, or in this case, barely nudging, the economy. So let's peel back the layers.
Okay, first up, we're diving into what's often called the engine room of Japan's economy, domestic demand. This is pretty straightforward. It's all the money being spent right here in Japan, by everyday people, by companies, and by the government.
Yeah, so when we talk about domestic demand, we're really just taking the pulse of the economy from the inside. It's a super important way to see how strong things are on the home front. So let's kick things off with the biggest piece of the pie, private consumption. We're talking about household spending, what you and I and everyone else are buying. It makes up over half of the entire economy, so it's a huge deal. And it grew by just 0.1%. What does that tell us? Well, it tells us that people are still holding their wallets pretty tight. With prices going up, it feels like everyone's being extra cautious, and that hesitation to spend is really putting the brakes on a stronger recovery. And you know what? It isn't just shoppers who are being careful. We're seeing the exact same story play out with businesses. Corporate investment, that's the money companies are spending on things like building new facilities or buying new machinery, it was also up by a tiny 0.2%. So yeah, companies are investing a little, but they're definitely not going on a spending spree. So here's the kicker. You take that tiny bit of consumer spending, you add in that small bump from business investment, and you factor in everything else happening at home. And what was the grand total contribution from domestic demand to our overall growth? A big, flat zero. Nothing. The entire domestic economy basically ran in place this quarter. All right, so if all the activity inside Japan added up to zero, you have to wonder where that little bit of growth came from. Let's look at the other side of the equation, Japan's trade with other countries, or external demand. Well, take a look at this. You can see it right here in the data. Domestic demand, or naiju as it's called in Japanese, contributed nothing. And external demand, gaiju, also nothing. It had no net impact on growth. So trade didn't help, but at least it didn't hurt either. But how is that possible? Let's dig in. Okay, this was actually pretty interesting. It turns out both exports and imports went down. Exports of Japanese goods and services to the rest of the world fell by 0.3%, which probably isn't a huge surprise given the slowing global economy. But here's the twist. Imports, what Japan buys from other countries, also fell by the exact same 0.3%. It's like they perfectly canceled each other out. So the net effect on GDP? Yep. Zero. So the story of the fourth quarter is one of stagnation, really. But that's just a 3-month snapshot. To get a real sense of things, we need to zoom out and look at how the entire year of 2025 played out. And for the full year, the economy did grow. We're looking at a real GDP growth rate of 1.1% for 2025. Now, compared to that flat quarterly number we just saw, 1.1% looks a lot more respectable. It tells us that over the whole year, there was definitely some real expansion happening. But, and this is a big but, things get really interesting when you look at another number. This is the nominal GDP growth. That's the growth before you account for inflation. And that number is way higher, 4.5%. So wait a minute, how can one number be 1.1% and the other be 4.5%? What's going on with that huge gap? Well, the answer, in a single word, is inflation.
The difference between those two figures is almost entirely down to rising prices. The GDP deflator, which is just a fancy term for a very broad measure of inflation across the whole economy, came in at 3.4%. So what this really means is that a huge chunk of that 4.5% growth wasn't because we were producing more stuff, it's because the stuff we were producing just cost more.
All right, we've thrown a lot of numbers and terms at you, so let's just pause for a second, step back, and boil this all down. What are the key takeaways from all this data? Okay, first off, the good news. Japan dodged a bullet and avoided a technical recession by posting some growth, even if it was tiny. But the not-so-good news is that this growth was basically on life support. Both the engines of the economy, spending at home and trade abroad, sputtered out and didn't provide any real power. The big weak spot continues to be us, the consumers. We're just not spending with much confidence. And finally, even though the full-year number looks okay at 1.1% growth, that flat finish to the year is a major warning sign. It shows momentum is weak, and it reminds us that a lot of the growth we saw was really just inflation in disguise. And all of this really leaves us with one massive, critical question as we head into 2026. If spending at home is flat and trade with the rest of the world is flat, where on earth is the growth supposed to come from? It's the big puzzle facing the Japanese economy right now.
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.